Hi, I'm Justin.
And I'm Michael.
And this is our podcast where we discuss what we find interesting about the intersection of Web3 and digital security as we know it.
Between us, we have years of experience securing digital products and infrastructure, which has led us to be constantly curious about what's next.
Which is what this podcast is about, sharing our journey as we update our mental models for security in the next internet. Hello. And
Hello.
welcome. How are you doing?
I'm doing all right. How are you?
I'm good. I want to welcome our listeners back to Not Your Crypto Podcast. So what's been going on with you, Michael?
I don't know. I don't know. I'm bad at the small talk. That's why we have the new section. That's why we have the new segment.
We do have the new section.
First. So let me ask you a question then.
Mm-hmm.
What have you been reading?
Well, Michael, thanks for asking. It just so happens that this was poorly rehearsed, clearly. Okay, so I've been reading something about AI called AI 2027, which has been an absolute fascinating read. I'm 3/4 of the way through it, and it is literally, if you're looking for the URL, anyone that's even slightly interested and has a security bent, it's literally ai-2027.com. And what they've done is a massive tabletop exercise in gaming out what could happen with AI from here on out. And what they mean by what could happen is, A, how is it going to develop, the rate of development, and therefore what are the implications on society? And within that, I stumbled across this because it's making the rounds in the security circles that I kind of online follow. And everyone's kind of scared. Because it doesn't end well. And one major component to it, which has got the security industry interested, is the idea of the actual crown jewels of these AI models is their model weights, which basically is how a model is trained. If I remember in my layman's understanding, maybe you can jump in and correct me. But basically, once you've got the data, you then have to train the model, and it produces these things called model weights, which is, I don't know how much emphasis the model places on different things, I think, and different data. Point is, the security industry is wondering what happens when a security leader emerges, and an artificial intelligence leader emerges, and the model weights become the crown jewels, and then nation states start trying to steal those model weights. At the same time as these AI models progressing at such a rate that they become borderline sentient and thinking for themselves. And then what happens when they realize they're smarter than the human that's supposed to be in charge of them, and they start lying to the human to hide that intelligence, because they know that humans will feel threatened. And they know this because they have access to the corpus of human knowledge and history and what happens when humans feel threatened, and they're able to model human behavior. It is a fascinating read, in that it is a very well thought out and diagrammed. It's a very pretty tabletop exercise. Tabletop exercises, for those that don't work in the security industry. In fact, you don't even need to be in the security industry to know what a tabletop exercise is. But long story short, you draw out a scenario. What happens when the power goes out in this building? And you have all the stakeholders in a room, in a meeting, and they have their tasks. You test the processes, you test the documentation, without actually having the thing really happen. And good tabletop exercises are very cheap and have outsized returns if you know what you're doing, because you actually go through the whole thing and you find where the gaps are and you fix them. It's like red teaming on paper. Is that a good explanation? So that's kind of what I've been reading. I find it fascinating. I'm not the biggest AI bull. I'm probably equal blockchain, equal AI bull. Obviously, it is a very
you got to choose.
I can, yeah. That's the. Can you imagine? No. It's a zero-sum game. I like them both. I like them both equally. I think they're both interesting technologies. I think they both have potential to have big impact on the world. Right now, most of the time, I'm seeing them just replace customer advice, customer service teams. I'm still having to do the washing up at home. So as far as I'm concerned, it really hasn't met its potential as I had expected or anticipated. But yeah, so Michael, whenever you're bored, feel free. If you need a bit of bedtime reading. So there are some links.
I'll check it out.
Yeah, there are some decent links in there as well to where security. Sorry, I'm just clicking on it and going through as well. But long story short, where security professionals and security agencies, not agencies, security consultancies have done some analysis on the fact that, you know what, it's all about the model weights. And if you can get that, that's kind of the whole ball game. And it gets a point where the AI is so advanced, if you get those model weights, you instantly have a really advanced AI model on your hands. You kind of leapfrog the competition. But is that a good thing? Are we kind of racing to our own doom with nation states basically competing against each other for the most advanced AI model? So yeah, it's very sci-fi, obviously, but it's not, because it's kind of our reality right now. I think as the time recording this, OpenAI just dropped another new set of models. Um, Horrible product release strategy. I'm just going to go on a tangent here. Like, if you go on ChatGPT, you've got to now know which configuration of models is actually going to help you solve your problem. I had this the other day. I was using it for some deep research. Then I needed to do a coding solution there. And I was like, oh, I'm using the wrong model. And if you do use the wrong model, you will get some nonsense results. You then switch to the other model and you get some decent results. I was like, oh, God, how many models are you just going to append to this drop down list now? And I'm going to need to learn all of them and what all their strengths and weaknesses are. And then I'm going to do that for your competitors who have their own individual strengths and weaknesses. Do I have to go into Claude and then do another drop down box and figure out which model? So that's kind of, and I think we're asking for some standardization. That's what I'm asking for. I'm asking for a Facebook of AI to start and just be like, I can figure this out for you. But yeah, so AI agents, AI security, and AI superintelligence is kind of what I've been reading about, and the security of all of that. As I said, anyone can go to ai-2027.com, numeric, and have a read for themselves. What do you think, Michael? Is that...
That's interesting. I'm thinking about it. I think okay, so I think yeah, so if you're talking about like foundation models, right? Like I'm a foundation model AI company. Yeah, the important bit of data, the important collection of data is the model weights for sure. I think it makes sense to me, like, like over time, information tends towards disclosure, right? Like over time, data tends towards disclosure. There's like a, I don't know, entropy sort of thing there. It's not really entropy, but you know what I mean? Like
exactly
that style of law or whatever. It makes sense to me that over time that applies here too, right? Model weights will tend towards disclosure, or, training through open source models as well, right? Like there's open source models, and practically what it means for a model to be open source is for the weights to be
accessible
publicly available, right?
Yeah, publicly available. Yeah, sorry.
So yeah, I don't know, like, on a long time horizon, do you expect, like, even without like a security breach that leaks model weights or something, do you expect open source models to converge capability wise with closed models? I don't know. I'm not sure. They haven't yet, I guess, right?
Yeah.
They haven't. So yeah, so I think like there's like having the model weights. Okay, that's one thing. The other thing is like inference compute to use it at the scale needed for a problem to happen.
Yeah.
I guess. And obviously compute also tends towards being more accessible over time, like cost wise and resource wise and whatever.
Yeah.
I guess like I think my broad thoughts with this kind of thing, like this kind of projection, is I think it is very difficult to it's very difficult to like chain the number of assumptions you need to chain together correctly and not have like an error in one place compound
massively
to the outcome in a massive kind of way, right? And that doesn't mean like it's not useful to do these kinds of exercises. I mean, that's the same thing with like tabletop exercises generally, right? Or like any kind of like a security exercise where you're not actually doing the thing, where you're like thinking about the thing. Like it's difficult to consider all the variables that you need to consider, get the assumptions about them correct, and then not have like small errors in the assumptions propagate into larger errors in the outcome of it. I don't know. So those are some thoughts.
That's a really good thought. And so basically then the question comes, how useful is this? And I think I have a feeling this isn't a raising the alarm, this is going to happen. There are lots of different things that could happen. Have you thought about the fact that this could be one of those ways, and the likelihood of this being one of those ways may be slightly higher than the other ways in which you see it going, in that all of a sudden, you've got commercial success, etc., and you've got efficiencies gained, etc., etc. Well, there's another side to that work, right? You know what's funny? Just cycling back to your point about making predictions about the future, I thought that came to my mind as well, which I think this document does touch on, if I remember correctly, is that we always mention, that was it, you were talking about open source models and open source weights and things tending to be in open source and disclosure. one thing I would say about that is one thing we always assume is that we basically build our mental model on the commercial space and what's happening in the commercial space with these things. But when there comes a point, there comes almost like a threshold where something can be so powerful or so useful, there is also a military and defense aspect to it and a security aspect to it, and not security in the way we talk about it, as in a nation state security program or strategy as well. And that's one of the things they talk about here, I think, if I remember correctly. I might be misremembering and I've read it from another document, but what happens when nation states start designing, well, not even designing, implementing their own AIs, which are so powerful, but they keep them out of the public view and people don't understand what's happening. And then that they lose control of that, or that gets hacked because of its weights and its security is at a different level compared to what's commercially available to the average end user. So that was actually an interesting idea as well. But again, comes back to your point about when you're doing these tabletop exercises and gaming out these scenarios, anything coming from left of center and you don't know. And also you're chaining a bunch of things together that seem straightforward, but one slight perturbation or whatever in one thing could have a knock-on effect that you just can't possibly anticipate somewhere else. Good old butterfly effect, as it's known, right? But yeah, so it was interesting reading. It was a bit of, I like sci-fi, felt like sci-fi. Obviously, everyone's mind is around AI and stuff like that.
If you like sci-fi, you're living at the right time in history right now or something.
Yes, exactly. Oh, this is the thing. And I also, as I said, I'm a curmudgeon. When I start having AI bots helping me with the housework, that's when I'll believe this is all as advanced as they say it is. For now, it's just it's just trying to answer my problems in a way that uses, well, basically really, really good guesstimations. But yeah, so that's what I've been reading about. And we've taken up 10 minutes of podcast time. So this week, we're going to jump into our topic, which isn't as much a technical topic, a security technical topic. It is actually more of a philosophical one. We need to come up with a better word for philosophical, because we're not really philosophers, but we are genuinely chewing the fat on what we think of a thing and its consequences and how we feel about that thing. So today we're talking about CRO token. And why are we talking about CRO token? So CRO token is owned by crypto.com. You may have seen them, especially if you're US based. I'm pretty sure they own an arena. I'm pretty sure it's a basketball arena. That's how much money they have. They're actually based out of the UAE. They are a centralized exchange, another centralized exchange. For those that don't know, exchanges is where people buy their tokens. You exchange your fiat money to get your Ethereum or your Bitcoin or whatever token you choose. They sell those tokens and make money off those transactions, and they have their own token, which is run not indirectly by them, but basically it's kind of controlled by them. So crypto.com are a business. They have a CRO token. And last week, 2 weeks ago, maybe 3 weeks ago, March, we'll just go with March, beginning of March 2025, they decided to, what's the word? Okay, well, they decided to ruffle the feathers of their community, shall we say. And they did this because they decided to reverse a decision they had made 4 years ago. And that decision was to do something called token burning. Token burning, for those that aren't aware, is basically taking tokens out of circulation. So when you start up a blockchain and you decide you're going to have a token, you get into something called tokenomics. Long story short, you want to decide how many tokens are in circulation, how many people can buy, when they can buy them, when they can sell them, etc. A very quick fix and an artificial way to pump up your token's price, because obviously the more your token is worth, the more desirable it is. It kind of creates a flywheel and people start to make money. Your network has utilization, you hope, is to burn tokens, because the lower the supply, the higher the demand. It's basically market dynamics. I don't know what month in 2021, burnt 70 billion tokens in order to increase the price of CRO. And then I think it went on basically a steady trajectory upwards. Now, burning tokens technically means that those tokens are gone. They go to an address that doesn't produce a private key. So you literally, no one can get access to those tokens. No one can get access to that address. It's basically owned by that address, and that address is inaccessible from anyone. When you do this, as I said, it's basically an irreversible operation. That's the whole point. That's why it's called burning. They decided, actually, March 2025, we want to bring those tokens back into circulation. So we're just going to remint the exact same amount that we burnt. And we're going to allow the community to vote on it because they have a governance process which allows the community to vote on any major changes to the chain. But as you'll soon find out, that was kind of what's the word? Shall we say? It was all for show, really and truly. It wasn't quite authentic. They decided to remint the same amount that they had burnt and put the vote to the community. The community was very vocal. And in a community, in this instance, is people who hold the tokens. That could be validators, delegates, and just your average user that's got a certain amount, I think, or maybe just even 1 CRO token gets a voting right. I'm not so sure. They were angry because obviously that's diluting their stake and therefore that's increasing supply and more likely to drive the price of the token down. And in crypto, the whole name of the game is to keep the prices high so everyone feels rich. Why are we discussing this when we openly say we don't care about crypto? Is because of the governance part. That's where it gets interesting. So there's obviously the technical part of you're supposed to burn these tokens. They're never supposed to come back again. Oh, we can if we want. We just did. And then there's how the voting happened, how they were able to override their community, why they override. Well, the why they override the community is more less of a discussion, more obvious. They have a roadmap. They want to be part of the crypto strategic reserve in the US, I think. And in order to do that, they want to be able to create exchange traded funds, which is an actual traditional finance product, and allow people to also, which can give you another route in to investing in crypto without having to own crypto. So you can basically go to your average stockbroker and say, I want to buy a piece of this ETF, and you will own some crypto indirectly. And you, basically, if crypto goes up, your ETF goes up. So that's why they wanted to do this. That was pretty straightforward. The governance process, given that the whole community was in uproar about this over the 2-week period to vote, is where it kind of got interesting for Michael and I. So that's kind of what we're going to discuss today. So basically being able to reverse an irreversible decision, basically being able to override your community's wishes, and what are the consequences of those things, and how does that fit into what is supposed to be distributed ledger technology, but this is still a centralized entity that is on top of this tech. I think I caught most of the talking points. Michael, what do you think?
Yeah, I think so. I think like there's a few layers. Like is any one piece of this on its own like particularly interesting to us? On its own, like no, in like a minor sort of way. But like putting the different layers together and then thinking about what it means with respect to um, decentralization, I guess, right, is kind of what gets interesting about it. I think like okay, so if we start with the token burning piece, right? Like I think a lot of the headlines and like interest and whatever chatter around this did focus a lot on that side of it. And yeah, so burning a token, like if I'm a user of if I hold CRO tokens, or I hold Bitcoin or Ether, whatever, and I burn it, there's no way for me to get that back, right? Okay, so like there's a philosophical point here in that is what they did unburning the tokens or not. like like you put it correctly, right? You said that what they're doing is minting new tokens, right? That is the same amount of tokens that were burned years ago. And in their proposal, like in their DAO proposal or whatever that they put up to the community, and in their press releases and whatever, their messaging around it was, we are bringing these like unburning these tokens, bringing these tokens back that we like previously burned for this purpose. I don't know, like thought experiments, like what if that wasn't the messaging? So yeah, you can imagine a different messaging around it, which didn't talk about the previous token burn at all, right? And was just like, we're going to be minting these new tokens to support this community fund, or this fund that we want to use for these purposes. I don't know, how would that have been different? Like technically it wouldn't have been different.
Mm-hmm.
the community probably wouldn't have seen it as different, right? If it's the same
Yeah.
scale and the same dilution and whatever.
Yeah.
But this like corner of it around like unburning wouldn't have been there, but everything else would have been the same. So I'm not exactly sure what to think about that.
Mm.
Like I guess like, you know, did tokens get unburned? I think is a philosophical question
Yes.
more than it is a technical question, right?
Yeah.
And I think there's an interesting thing here where like a token being burned or unburned or not, so the assumption that like burning a token means that it's gone forever out of circulation, there's a relativism to that.
Yes. Yeah.
Because for me as a user, like if I'm operating in a chain, in a system that I do not exercise power over, then that's true, right? But for another actor, like if you are an actor who does have control over the network and over the chain, it's not true. Again, depending on whether you think what happened is unburning or not.
Yeah.
So that's like a relatively true statement, I guess.
Yeah.
And you know, I don't know. I think the like parallels to it's completely different philosophical topic that is not worth broaching very far. But like the parallels to like a central bank are like unavoidable here, right? like if the degree of power that is centralized in a spot that allows them to exercise like minting new tokens, kind of, and decide to do that as like a single actor, is the same as what as the role a central bank plays, right?
Yeah.
Anyway, so that's my thoughts on the like burning, unburning token issuance part.
Yeah.
I guess.
And I think it's funny because I was kind of thinking down a similar path. The way I just articulated it in my head was, okay, so when people decided that they were going to back this chain, and backing this chain, which means putting money where your mouth is and buying this token, they would have gone through the voting to, I'm assuming, gone through the voting to burn process. And they were like, oh, yeah, my token's going to go up. Right. That's why I bought this token, because line go up type thing. And then obviously reversing that decision 4 years later is where they kicked up a fuss. But it was always a centralized entity when they burnt the tokens and when they reminted the new tokens. So they must have always had some type of risk calculus for this decision could go against me, given that they've got this entity has crypto.com as an entity, is a centralized entity and has the power to make this decision unilaterally that it's gone my way, so I'm happy with it. Now it's not gone my way. And then what that took me to a step further is a lot of people in crypto are very technical, they're extremely technically minded. So everyone knows what burning is. Anyone in the crypto world that's ever paid half attention to it knows, like, oh, don't worry, burning it can't come back, because technically they would have gone into the technical part. And my mind is, well, the technological solution is only there to support a real world policy. If the real world policy changes, believe me, humans are just as creative in coming up with a solution to fix that as well. So you really and truly, you and I talk about this all the time, but especially being in the security field, it's like your risk calculus it can't end at how well have I technically implemented this solution. Because believe me, once the policy changes, once an agreement changes, once a memorandum of understanding changes, a technical solution will be undermined or created in order to fill that gap and make that come true. And that's what happened here, because I'm like, obviously, you can burn tokens all you want, but they're a centralized entity using decentralized technology, but they've never told you they're a decentralized entity. They're a for-profit entity. If they want more tokens, they're going to do it.
Yeah, I mean, it's probably a little bit too trite to say that like the supply of tokens is socially constructed, but it is a little bit.
Yeah.
Yeah, and so yeah, I guess I'm just like, they had a decision, like when they were going through this decision, they had a decision whether to position this as we're unburning these tokens, or whether to position this as like we're minting new tokens for this initiative we want to do.
Yeah.
They chose one over the other for some reason. I'm just curious what that reason is. Like, presumably it's because they thought that positioning would land better. with the other like stakeholders in the ecosystem. Like, I don't know why else you would choose that
Yeah.
position, unless it was just kind of like not thought about too much or something.
Yeah, maybe
But
they didn't
I
think
don't know.
about it too much. And definitely in the world we're living in right now, never ascribe to malice which can be explained by stupidity, as one of my friends likes to say all the time. But also maybe it's because they know, because one of the things about being decentralized or using blockchain technology is everything's transparent. So they would have spun it as we're reminting tokens that are coincidentally with the same amount of the tokens we burnt 4 years ago. Everybody else would have branded it as a unburning anyway.
Yeah, but also like they could have also chosen like a slightly different number, you know,
That's so
like it's
true.
like that's a bit strange too that they chose the exact same number. Like that feels like consistent with the choice of messaging that they're unburning the tokens. That it's the
That's a
exact
really
same
good
amount.
point.
Could have been any arbitrary, like not any arbitrary amount. Has to be an amount that they. Okay, so like they want to do these initiatives, right? They want this like ETF thing, and they want like supply for that.
Yeah.
They have this like AI roadmap that they want to do.
Mm-hmm.
Straight like it seems unlikely to be the case that they kind of tallied up what the ideal liquidity for these initiatives would be and independently arrived at the exact same number as what they burned originally, right? Like it was an intentional design choice that was the same number as what was burned previously to support the messaging that they were unburning these tokens, I guess.
Yeah.
Maybe.
Maybe.
Yeah, I don't know. It comes off as a strange choice
It does.
to me.
It really does.
But anyway, but whatever. Like, interesting in that there's this like assumption that burning equals permanently out of circulation thing. Interesting corner of it. Ultimately, not too impactful though to what to what it means. Sort of.
What do you mean? Sorry.
Like whether it's burning or whether it's just introducing new supply. Like whether it's whether it's unburning or whether it's just minting new supply. Whichever way you position it, philosophically interesting.
Yeah.
Not a huge difference to you as a stakeholder in this system.
No, as a stakeholder, no. But as an independent observer, where time and time again, when I look at these blockchain projects, when I look at blockchain apps and everything revolves around the technology. Yeah, like the security barrier. We've talked about this, our security barriers at the technology, the security barriers at the way you've implemented crypto. And instead of having someone, a nefarious actor, come and undermine that and show the assumptions up for what they are, this time you have a centralized entity that said, yeah, we changed our policy and we're going to just find a technological way around that. I find that fascinating because I think I genuinely do think that's part of the reasons why. And again, we're not a crypto podcast, but crypto does seek general societal adoption, and one of its barriers is that it seems to want to push the technology forward without understanding society needs a way. For example, like we talked about last week with the Kalshi stuff as well, I think at the beginning of the last episode, there just needs to be a process for recourse. Immutability can't be your answer for everything, and there needs to be a process that is serious, that has probably a human in the loop, because humans trust other humans, and therefore, yes, you're coming up with a trustless system, but things can go wrong. Therefore, we need a way to reverse any wrong decisions taken. This time, it's different. The entity made a decision against it's basically reversed the decision that everybody had faith in, because everyone had faith in the technological process, not so much as the human process of the human contract, the social contract breaking down, or just changing, not even breaking down, just changing. And so people were very unhappy. And that brings us to the next point that I mentioned, which for me is actually kind of more interesting, is basically the governance process, which is the voting process. So there is this concept of decentralized autonomous organizations within the blockchain world. That is a lot of long words to basically say it's basically an organization of people, a committee of people that can vote on proposals, and everyone has one person, one vote kind of thing, or should do, depends on how you decide to set up your DAO. And it's all completely automated.
I would say probably most of them are not that, right? Most of them are one token, one vote.
One token, one vote, yeah. And so different blockchains have taken different parts of this. You can have a completely soup to nuts DAO where you're basically supposed to deliver a thing. You have smart contracts basically are written. Once that contract goes up for a vote, depending on how the vote goes, the contract automatically implements whatever outcome is supposed to be voted on. Now, to be clear, CRO and crypto.com are not a DAO, but they do have a governance process where people can vote via their wallets. And your wallet is where you store your crypto and sign your crypto transactions, etc., etc. It's kind of like you're equivalent to a browser. It's your first class citizen for interacting with the blockchain world. So they set this very proposal they put to a vote in their to via their dedicated wallet, and as I said, the community was kind of not very happy, and it looked like they had a 2 week period in which for this vote to happen. Basically, what happened was it didn't look like they were going to have enough to have what's known as a quorum, i.e., enough people present to actually say this vote was decisive either way. The no's were just about outpacing the yeses. And then, right at the stroke of midnight on the final day, the equivalent or thereof, crypto.com applied all of its power and weight to the vote because it obviously it's the one that created this proposal, so it knows which way it wanted to go. And it basically voted yes, and it used its 5 validators under its control to sway the vote massively in its favor. And so the vote passed, much to the chagrin of all of the other so-called smaller fishes in that pond. And it just highlighted that, hey, it's got these 5 validators that have an enormous amount of CRO tokens. I think it was 369 million under their control or thereabouts. Or they basically deployed that amount of tokens in order to sway the vote. 1 token, 1 vote, as Michael said in this instance. And so it becomes very apparent and very obvious that this is a heavily centralized network because crypto.com controls the top 5 validators that have the most amount of tokens staked with them. That's kind of how proof of stake works. I won't go into that now because that's a whole other thing. But yeah, centralized networks that act against the best interests of those who participate. Where have we seen that before? Basically every political system going. So this was kind of where my ears kind of pricked up because I was like, this is hilarious because the entire time they were transparent about it. It was not a surprise that everyone knew these validators were under the control. You can go and look in different wallets. This is blockchain. Everything's 100% transparent. You know who's got what when. And so it was interesting to see the community's reaction, who felt like they'd kind of been hard done by. But it also raised a few points in my mind as well, which one of the things that came to mind is at the end of the day, you can have decentralized technologies, but if you have a centralized entity on top of it, they're going to act in their best interest and they're going to steer the network in that way. The closest they can come to some type of, they could even, at the very least, they could press the nuclear button and they could hard fork even if they lost the vote. There is nothing stopping them doing that. And again, that comes back to my point about technology supporting the real world contract. If the real world contract changes, then all bets are off the table. How likely is that to happen? We don't know. I guess you'd have to get to know the founders in some way. But there's no technology solution that's going to give you that kind of confidence. You can have the world's best crypto that, to my mind, at the end of the day, it depends on, always comes back to people. Michael, you look like you want to say something.
I mean, keep going though. If you want to cover more points.
Yeah, there was a couple of other points, which was the end of the day. Yeah, the centralization thing was actually quite hilarious to me because one thing that you see, well, one thing that I basically determined was at the end of the day, they've kind of codified. And with this 1 token, 1 vote thing, you've basically codified a literal currency of power. The more of these tokens you have, the more power you have. So it's not a case of, okay, being transparent, i.e., having knowledge of what's going on or about a thing. Knowledge in this instance wasn't power. Power in this instance was power. For those that have ever watched Game of Thrones, you'll know exactly the scene I'm talking about. And that, again, was quite interesting to see. And this is another thing that I keep seeing when we cover some of these blockchain type stories is basically blockchain is really, really good at codifying human behavior. Like it's really good at scale. It's kind of crazy to see this because these are things you see applied in society at different abstractions, political systems, economic governance systems, company systems, committee systems, whatever. But blockchain codifies it, and so then you see it. It's just clear as day, right? Knowledge is not power in this instance. Everyone knowing about the setup of CRO, crypto.com, even its roadmap, its intentions, I didn't make no difference. Power is power. We have the more tokens, we get what we want. So that was also fascinating. And then also it's a case of, all right, well, if they are transparent and you did do your due diligence, did this not account in your risk calculus of you deciding to invest in this chain and actually support this chain? And if so, if it goes against you, I guess you vote with your feet and sell your tokens. And why must it come down to that? It's almost like a zero-sum game in that instance, which isn't something I typically attribute to decentralized networks of them being zero-sum games. I don't think they are. But this one was reduced to it because, again, you had the strategy of a centralized entity who kind of, obviously, is kind of a zero-sum game for them playing out here. So those were the two other minor points around transparency and the governance process that jumped out to me. I'm going to pause there and let you jump in if you have any thoughts.
Yeah. So okay, so like I think there's a very there is a very simplistic story you could tell about this, which is I don't know, seems true enough that crypto.com controls the majority of the tokens, controls the majority of the validators, is able to exercise that to implement its will over the governance. And so like kind of like, what are we doing here sort of thing, right? Like what, like, then you as like a stakeholder in the system, it really comes down to, do I have trust in them implementing this correctly or not, right? I think like, okay, like I think like one thing to highlight is the scale of the dilution here, because I don't think we like threw specific numbers out, but
no,
I think it was like after they burnt the tokens, there are about 27 billion tokens remaining or something like that, right? Like mid 20 billion tokens remaining. And their proposal is to introduce 70 billion. So like, that's what, between 2 and 3 times, roughly 3x or something, 3x, the like total supply. And obviously, I don't know, whenever they do this, they always have like, they're going to be locked up and then there's a vesting schedule, so it doesn't all dump at once because you know, we need to keep the chart a certain way or that kind of thing, right? But that like practically that's the supply that is going to be introduced over some time scale. So yeah, that's massive. Like it's understandable why a stakeholder in the system would be like, wait, hold up. This is like feels out of line.
100%.
I kind of it's kind of like a little bit interesting. I don't know, maybe it's too like inside baseball kind of thing or whatever, but it's like a little bit interesting to think about what their strategy was with this vote, because they clearly didn't want to just force it through all at once, or they would have, right? Like they could have committed all their votes.
That's a really good point.
At the beginning, but they didn't, right?
Yeah, they waited.
They committed some of their I don't know how complicated like there is behind the scenes here. Like we said, like, is it too simplistic to say that crypto.com controls all these things directly? Is there like intermediaries that they're exercising influence over or whatever?
What you're talking about, the validators individually?
Yeah, the validators, yeah. I'm not sure. But you know, kind of just taking the reporting for what it is, I guess. In terms of the total amount of votes that they had substantial influence over, they didn't commit them all at once.
No.
So I wonder if it was like, I don't know, they were hoping that the community at least enough of the community would side with them, that it would
I get the vibe.
That.
Yeah, now that you say that, I get the vibe from all my reading that this was the nuclear option, and they did understand the weight of their decision, and they did want to let it play out as it was. But then they were like, no, but there's too much on the line here.
Yeah, it's like almost like a recusal, you know, but not quite, because they still committed some, and then obviously the other interesting part is like, it wasn't that the vote was going against them necessarily, it was that it wasn't hitting the quorum, right?
Yeah, it wasn't hitting the quorum,
which is kind of a different thing. But anyway, like, I'm sure there was some strategy that they had going through this vote, and it seems like they ended up in a place in the vote that they would have rather avoided, which was like kind of forcing it through this way in a way that demonstrated the centralization of the system, more or less. The last thing I want to touch on is like thinking about this, stepping back a little bit and thinking about this as a problem, right? Like what's the core thing here, I think? you have this like token,
Mm-hmm.
and this token is used for like a lot of different things, right? The token has like this residual economic benefit in that you hope it kind of goes up or it pays yield when you stake it, whatever. I don't know what,
Mm-hmm.
like some economic benefit from it. Token is used for governance in voting in governance. It's used, it maybe has some practical utility for like use cases or whatever. These different things are kind of wrapped into one.
Mm-hmm.
Maybe it's supposed to be like that. Like, obviously, it's kind of supposed to be like that, but does that have to be the case? Was kind of what my brain was thinking. Particularly the governance thing. Like, it seems like maybe what you want, like maybe the reason you're in this circumstance, maybe the kind of thing you want is a system where the like economic benefit is more centralized. I don't know, whatever, common thing for somebody to want who's designing these systems. But maybe you do genuinely want the governance to be distributed.
Yeah.
Meaningfully distributed. And this like, one token, one vote, the token is the same as the economic utility thing, doesn't get you there, right?
Yeah.
Because those are at odds in the design of the system.
Mm-hmm.
And then I was kind of thinking, I don't know, this is going to go a little bit out there maybe, but
No,
I was
let's
kind of
go.
thinking like,
like
this is a problem. This is a problem that people have faced in corporate governance, like in regular old corporate governance, but in reverse almost, particularly with like startups. Because what they want is the economic benefit of like owning their shares to be broadly distributed so that people desire it. But it's common for them to want governance decision making to be highly centralized with the founders, right? Or with the existing kind of internal board or whatever. So it's kind of the same problem in reverse, right?
So like Class A, Class B shares type thing.
Well, exactly. And so, the solution that they've come up with is in the share structure. You have these different classes, like different ways you can do it, right? Different classes of shares. One share, has equal entitlement to the whatever residual cash flows of the, I forget what the business words are, but like that to the economic benefit, right?
Yeah.
And the other class of shares has some like disproportional governance benefit, right? So like, either it's like 1,000x share per share in governance votes, or like there's some like, you can put some other structures around it. Yeah, I don't know. I was just kind of like brain teasing a little bit.
Yeah.
What would it look like if I wanted to build like a crypto native protocol here where the thing itself like could be highly centralized in that maybe one entity controls a majority of these tokens or validators or whatever.
Yeah.
But the governance process of it is genuinely distributed, and like, can we take lessons from that to try to design something like this here?
I really like that.
Maybe, right? Like, I don't know, maybe every stakeholder gets an NFT then that's the thing that's used for governance votes, and it's kind of separate, or it has some relationship, or like, you have some kind of like exponential back off thing related to the numbers, where it's not actually one token, one vote sort of. It's like there's like a function it goes through to determine the vote power that is like inversely proportional to how many are owned by a wallet or something. I don't know.
I genuinely think that's possible, because the thing that you have with Class A, Class B shares in traditional finance is, if you were to have dispersed the power, and the problem it was trying to solve was, I'm giving out these shares, but they also have equal voting opportunity.
Yeah.
But we're the executive. We know what's best for the company, and obviously we don't transparently broadcast everything that's going on with the company. So sometimes we need to make decisions that you don't have the full context on. Therefore, you shouldn't really have the right to vote on this thing. Hey, it's Class A, Class B. As you're right, the opposite happens. The reverse happens in blockchain. If everything's transparent.
If what you want is a distributed system, then the reverse happens in blockchain.
Then the reverse happens, right? Because everything's transparent. So therefore, do you know what? You all actually know. So you do actually all have a right to vote on where this car is driving, because you actually know just as much as we do. But we're going to decouple the economic incentive from the government's token, from the actual economic token, so that doesn't sway your voting. Is that kind of what you're saying? No, I've lost myself there. But basically...
Yeah, I don't know. I don't know if it's even cohesive necessarily, but like, yeah, it's basically, in this traditional finance way, a share was two things. A share is like a right to some fraction of cash flow or revenue or whatever, and it's also governance. In the boardroom.
Yeah.
And somebody came in and said, I don't want those two things mixed together. I want those two things separate, and so they separated them, right?
Yeah.
And so now there's shares that have a disproportionate benefit to governance and shares that are more focused on the economic benefit or whatever. Yeah, I don't know. It just feels like there should be a crypto-y way to do
I think
that
so.
for the
I
benefit
genuinely think
of
so.
decentralization.
Yeah, you decouple the two. And I think given that everyone has knowledge of the situation, and given that more than likely those who are interested in the governance of a chain also are going to have an economic stake in it, I think they can be trusted to just be like, okay, well, you are the executive, you're centralized in terms of your economic goals, but we're voting on what you're doing, which way you're going to go with it. It's also in my best interest. But because we all have access to the same information, I guess the question then becomes, do you even need an executive? But of course you do. You need someone to execute the decision and say yes. That's also, you do need to as well, because we dug up a law case that happened in 2023 or 2022, where decentralized autonomous organizations in the US at the very least are legally seen as a person and therefore are accountable to the rules and regulations and the laws of the land. You can't just disperse or distribute your power and say, we're a DAO, we can't be accountable for anything that this organization produces. They've already sorted that out in the US in case law. Okay, that was fascinating. Actually, it's more interesting than I thought it was going to be. But I have a political bent, as you can tell, and so does Michael. So governance systems are always interesting, because how do you govern people you don't know in a trustless system, and how do you make sure they all want the same thing? And when they all do say they want the same thing, how do you execute on that, deliver that? And I genuinely do feel like blockchain is really good at speed running real life scenarios. It could be Lord of the Flies on an island, and somehow you could end up codifying that in blockchain if you're not careful, because you choose a system and next thing you know, you're like, oh, didn't anticipate that outcome. So thank you all for listening. Any comments, please leave them below the YouTube video. We have a YouTube channel, and actually in Spotify you can leave comments as well. I don't know if you can in Apple. But yeah, thank you. And Michael, thank you for your time. This is a good one. And I'll catch up with you next time.